I'd like to start the event by asking our visionary debate group to come forward. I'd like to introduce you to Mr. Ahmed Julfar, who's a group CEO at Etisalat, and Ghassan Hasbani, who's the CEO of Greycoats. Please welcome these two.
Very good morning to you all. First of all, it's a great pleasure to be back to this conference that's growing year on year in this part of the world and becoming a platform for all senior telecom discussions and debate. And it's also a pleasure for me to be sitting here with a great colleague and friend and visionary and leader in this industry, Mr. Ahmed Julfar, CEO of Etisalat Group. Today, we're going to use this kind of dynamic format. We will have a presentation running in the background to guide our discussion. And we will have an open conversation about Etisalat Group, about the telecoms industry, challenges, opportunities, past and future. Well, first of all, let's go very quickly through a... Let's see if this works. Yes. Ahmed Julfar, CEO of Etisalat Group since 2011. This is his 27th year at Etisalat, if I believe. Almost 30 years, mashallah. 12th biggest operation in the world and the largest in the region now, officially. Operating in 19 markets, and it all started from one market in 2004 with a few 100,000 subscribers. And you can see within one decade what this group has become. A market capitalization of 25 billion, putting it in the lead on the valuation side. Almost half of the revenues today come from international markets. So basically we're talking about a truly global operation. Now, I'll let you have a look at this chart, which is basically the footprint of Etisalat. It's quite impressive, which leads me to my kind of first question. 19 countries, and you have here revenues, 34.7 million subscribers in Asia. You have 9 million subscribers in Central Africa and West Africa, and 39.4 million north of that. Many subscribers leading to 180 million in this quarter of 2014. Let's start with a soft question. You've been in the company for 27 years. You've seen the progress of this organization, of this setup. What is it like today to be leading a company that within one decade has become so global? What are, in your views, the greatest things that have happened in this lifetime or our career time in this organization? And where do you see the key challenges going forward? What's it like? What does it look like from the inside?
Thank you, Ghassan, and thank you, Tony, and for the Telecom Review to organize this event, to see old colleagues and to meet new people. It's really a good gathering. As you said, Ghassan, if we go back 10 years ago only, Etisalat was operating in its home market, the UAE, only one market. And we had a total of approximately 4 million customers at that time. And in 10 years, we're operating in 19 countries, 180 million customers. Not only that, as you mentioned, about 50% of our revenue is coming from international operation. I don't want to go back 27 years, but let me go back maybe the last few years. Since the 90s, Etisalat made it part of its DNA and culture to lead in technological advancement in the region. So we were the first GSM 3G, and even 4G in the region. We are the first to launch commercial internet in the region, and we are continuing with this path. Today, we already made commitment to be the first to launch 5G in the region. We have signed an MOU with Huawei to do that. The UAE today is the #1 country in the world when it comes to fiber to the home penetration. It's probably also the #1 country when it comes to smartphones penetration. So all of it became part of Etisalat DNA. Now, this readiness for going outside, Etisalat was ready many years before we went. And we have shown a great success when we entered Saudi Arabia 2004, Egypt 2006, 2005, and so on. They were greenfield operations. Starting from zero, starting from scratch, we made them to be a great success because of the people we had, the team, because of the capability we had and the expertise we had. You ask about what are the challenges going forward. Here I want to go back many years ago, not 27, a little bit more than 27 years ago. I want to go back to 1985. Maybe a few of you will know this. 1985 is when Judge Green, that was his name, the name of the judge, he decided to break up AT&T. At that time, all this, I think, explosion of telecom started at that time. Because before 85, telecom was a government service by either the ministry or, excuse me, by a PTT. And it was very, very basic services, clearly monopoly service everywhere. Then you started to see regulators were being set up in many countries. And the main purpose of regulators at that time was basically a couple of issues. Number one is to introduce competition in these markets, increase penetration, lower prices, improve quality of service and coverage. In most countries today, all of these KPIs and objectives have been fulfilled. So does it mean there is no role for regulators today? No, it doesn't mean that. I think the regulators today need to define a new objective for them to create value in the sector for the operators, for the customers, for the economy of these countries, as well as for the investors. And this is, I think, where regulators have to reinvent themselves. Maybe in the UAE we are a bit lucky because I think they already started on this path. We started to see signs of thinking in that direction in other markets we operate, but much more needs to be done in that domain.
So regulation needs to move at the pace, or at least even faster than the pace of the industry is developing to keep up with it.
Exactly, definitely, because when this explosion started, regulation was ahead of operators.
Yes.
I think they need to be ahead today of the game.
And they need to drive. Okay. Very good. Well, moving forward, this is a very quick thing going through 2004, just as a reminder for all of us as to where were the key milestones for Etisalat throughout the year. So here we're seeing we started in March here in the sequence. There were many things before. But you had the agreement for a 4G deployment, and you also signed a network infrastructure sharing, or started an initiative in infrastructure sharing at the group level. Tell us a little bit about this. This is quite interesting, coincidental set of events that happened at the beginning of this year. On one side, you're looking ahead to deploy the 5G. On another side, you're actually looking at efficiency in operations. Is that part of the strategy where you're actually reducing your operating costs on traditional type of activities and pushing your investments in the way forward? And are you convinced now as a group that infrastructure sharing is the way forward?
As I mentioned before, our DNA is to lead technologically in the region, and this has been from day one.
Yeah.
That is why in March we have signed this agreement with Huawei to develop 5G and to be the first country. On infrastructure sharing, this is applicable to different markets in a different way. In markets, especially smaller markets, where you have 5 or more operators, or even 4 or more operators, and you have very diminishing margins. There are two things to happen. One is consolidation of the market need to happen, and number 2, infrastructure sharing, at least the passive infrastructure sharing, which is simple, straightforward. And this is a win-win proposition for all. Every operator will benefit out of it. 10 years ago, most of us here I think, are engineers, and every engineer would like to have his own network. He wants his own tower, his own equipment, everything. Today, that is changing. And this is, I think, where the regulator need to also have this in their agenda. They need to push for infrastructure sharing to improve the value for all stakeholders, whether it is the customers or it is the investors.
Moving forward, you looked at, continued looking at LTE, deploying LTE in April 2014, 300 megabits per second, so enhancing the LTE infrastructure. And of course, you looked at financing facilities, major financing facilities, for the acquisition of a 53% Vivendi stake in Maroc Telecom. So here we're seeing, again, further investment in increasing the capacity of broadband on the networks, and at the same time increasing the scale of the footprint across the region. Do you see this as a key cornerstone of your strategy, growth in scale, growth in capacity, and continuing to focus on this kind of value-added infrastructure play, while you mentioned the infrastructure sharing on the passive element of the infrastructure? Yes. Is this something that we're going to see more of in the future?
Definitely. If you go back to the period from 2003 to 2008, during that time, the global voice traffic have increased by 3.5 times in these 5 years. However, operators were able to monetize 50% of it. So revenue has increased by 1.7 times only. But if you look at the period from 2008 until 2013, the traffic, the data traffic, mobile data traffic, have increased by almost 50 times. 50 times. However, the industry was able to monetize 2.4 times. So in the voice, we were able to monetize 50%. In the mobile data, we were able to monetize 5% only. So there is huge capacity requirement. And that is why we are taking these opportunities and have deployed 4G in the UAE, in Saudi, and soon in Morocco. These are the markets where 4G is ready, or at least has been launched.
And is scale your way of compensating for this lower monetization of data traffic, which is increasing significantly and kind of having its value wiped out by other players like OTT and the emerging players? Is scale, do you see it as the answer?
Definitely scale is one of the initiatives we have, strategic initiatives for us to compensate this. And as you know, telecom is a scale business. Yes. The bigger you are, the more efficient you are, and you could be ahead of your competitor, especially who are smaller operators than you. And this is why scale does really matter. And Maroc Telecom, for example, is an excellent company, profitable company. They operate in Morocco, which is an excellent market, plus 4 African markets. Yeah. Having an excellent margin, but also have huge potential for growth in mobile data, in ICT, in B2B.
In addition to scale, you seem to have actually also focused on increasing your stake in some of the operators, which is control as well. So it goes without saying that it seems that control is also an important aspect of monetizing and leveraging value creation. Are you looking to continue with that path? So you're no longer effectively a minority investor in your operations. You're also looking at following the Maroc Telecom acquisition, you have a kind of duplicate footprint now in West Africa. So are you looking at that as well as a potential consolidation target, both on control as well as duplicate and the efficiency factors?
Increasing our stake and having control is very important, but that depends on many factors. The local regulations, whether it is the telecom regulation or the commercial regulation in these countries. We want to have majority control in the operation, all the operations we have, and we want to have enough management control for us to really add value to the operation. Now, certain countries have certain regulation of having local minority shareholding, and we have to respect and work within these regulations. If you look at Maroc Telecom, now Maroc Telecom is operating in Morocco plus 4 African markets, and we have our 6 African operations. And Maroc Telecom is acquiring these 6. So they will be the biggest telecom operator in West Africa, in Franco-speaking nations. They have demonstrated great success in the 4 African markets they operate, excellent growth, about 50% margin. So they have the DNA to manage in that region.
And as on that point, you see that Maroc Telecom is becoming the lead operator for you in Africa. As you go forward, are you seeing this kind of regionalization emerge within the group where there will be lead operators in each region, looking after kind of affiliated or smaller operations that are scattered to create maximum value also at a regional level?
See, if you look at West Africa, it's 11 countries, and the biggest country is Morocco. So Morocco will be the anchor for managing and operating all of those. So it's a cluster by itself.
Okay.
Will be managed and operated by Maroc Telecom. If you look at our other footprint, we have, a big operation in Nigeria, which is growing year on year. We have a big operation in Egypt, Saudi, UAE, and Pakistan. So these big operations require a big focus from here to help them and support them. Maybe Pakistan can extend certain, which they are doing today, to Afghanistan and Sri Lanka, 2 small operators in that region. However, the big, what we call them the big opcos, will be managed from here, unless in the future our footprint changes and there'll be more opportunities.
Okay, very good. Well, it's been an eventful year. In 2014, you posted a 22% year-on-year increase in net profit at the group level, and your revenues reached 3.6 billion approximately, increasing 38% year-on-year. It was a big eventful year with all the activities that we saw on 5G, LTE deployment, the acquisition of Maroc Telecom, and the success stories around the world. There was one little glitch, though, with Mobile that took a lot of media attention in Saudi Arabia. And it's worth kind of stopping at momentarily because it almost overshadowed all the other activities in the media as if this was the only event that Etisalat has experienced in 2014. Can you tell us about it a little bit more? And has the dust actually settled on this case today?
You know, Ghassan media like these kind of stories. They like the 10% of the bad news. But if you look at Saudi Arabia and what Mobile has done so far there, the success of Mobile in Saudi Arabia, we have not heard of any other success stories like Mobile. The value they created for the Saudi markets, for the Saudi consumers, as well as for the shareholders of Mobile. It's a great value in all respect. Now, there is a challenge in Mobile today. The company is very solid. The company has so much capability and potential. I'm very confident they will overcome that in a short while. But we here in this region, we like these kind of stories and we like to talk about it more. Other than mobile, the success and the growth in Q3 was attributed mainly due to consolidation of Morocco Telecom, but also due to organic growth of our operation, especially, for example, Egypt and the UAE have been growing very good this year, as well as Nigeria have shown an excellent growth in 2014.
Which leads us to the group revenue discussion. Your revenues have actually grown 38% year on year at the group level to get to 3.6 billion, and in the UAE, a 10% year on year, which is, again, quite interesting to see an incumbent operator in its local market growing at 10% year on year. So effectively, while the general consensus was that because of the acquisition of Morocco Telecom, you had a significant growth, while it's not the only thing that grew internationally, yet you are still growing your local market as an incumbent operator. Is that predominantly due to data?
The growth in UAE is attributed to different factors. Number one, there is a new management team which we have put about a couple of years ago. And this is the outcome and the result of that management team. Number two, the investment which was made in the UAE in 4G and fiber over the last maybe 10 years, I mean, it's equivalent to 21 billion dirham. And this is where you see the growth coming is mobile data, but also from fixed data. Our eLife proposition, we have an excellent growth year on year. Number three, our digital services is also started to pick up. We created a digital services unit where we as operator, we don't have the DNA to create this digital. However, you need to focus how best to partner with the best in the industry.
And we'll come to that a bit later.
Okay. So going back to the UAE, it's and two other reasons. Number one, the economy of the country has been growing, which is fantastic news. And the other thing, our wholesale business have also been growing in the UAE. So it's many reasons for this growth in the UAE. In summary, the country is doing very well, but also the company is doing very well.
Excellent. Well, looking at the effectively the split in the revenues of the group, as we mentioned earlier, you have about 48% of your revenues coming from international operations. Looking back on the previous year, this was about 35%. So a significant move today with this major acquisition in North Africa. Of course, Morocco Telecom Group accounts for a major portion of this international portfolio. With it comes a lot of opportunities in the Moroccan market. Let's move to the profit discussion. On the group level, net profit has increased by 21.6% and 8.7% in the UAE. So you've been maintaining a profitable operation while expanding internationally in assets that are generating net income, basically, for the group. So that's one quick question. As part of your strategy, have you been avoiding assets that have a long-term growth potential at the expense of current net income and capabilities? Or is it just coincidental that you have acquired and moved into a portfolio that is actually generating net income?
See, Ghassan, when we started our international expansion, most of it was greenfield, except two operations, Pakistan and Morocco. And most of these greenfield, initially, you need to invest in CapEx. You need to invest in operation. And revenue, I mean, telecom is a long-term business. It's not a short-term. So that is why, from this investment, which was made from 2004 until now, you started to see revenue and profitability coming from the international operation. So it is not coincident. It is based on the earlier decisions, which was made to expand outside. I remember when the regulation or the laws in UAE has changed to open the market for competition. At that time, immediately, our strategic option was we need to expand outside. And one of the advisors whom we have engaged in 2004, they said your vision should be 50% of your revenue initially should come from outside, and ultimately 50% of your profit should be coming from outside for you to maintain a very healthy growth and make it attractive for investors and your shareholder to keep their excellent returns. And this is why we have this situation.
Yeah.
We are confident we'll continue on the same track because next year we expect also it will be a healthy year for Etisalat.
Well, speaking of profits, looking at the makeup of the Etisalat group profits, we find that while 48% of your revenues are coming from international operations, it looks like 63% of your capex is going into these operations. Is that either an efficiency issue that you're going to be dealing with, or is it actually an investment in growth in these operations because they are high growth markets?
It's more of the second part. Number one, this capex figure include, for example, 3G license we acquired in Pakistan. So it's part of the capex calculation. And so you have to invest in license in these countries, for example, Pakistan. You have to invest in 3G capex. And the UAE, this is already done over the past many years, whether it is 3G, even 4G, and fiber. In other countries like Saudi and Egypt, we started to invest in fiber. Okay. This is, I think, another reason why your capex to revenue ratio is increasing in these countries. We have to make this investment to improve our position in these markets, to increase our share in these markets, and to be ready for the future explosion of data requirement. I recall Eric Schmidt said, he was saying like today we have 2.8 billion people who are connected to the internet, and in 6 years' time, there will be 8 billion people, which is the population of the world. On top of it, you'll have 50 billion devices connected to the internet. And all of these will require huge capacity. That is why we started from today thinking about the 5G, which will give about 1,000 folds the capacity, and it will give the consumer an excellent experience with today up to 10 gigabit per second. So it's going to be a different ball game. I think the customer behavior is going to change drastically. And in a few years' time, there will be more of the younger people who will be the main customers. People who are not used to read newspaper, who are not reading magazines, who are not watching linear TV like us. There'll be people who want to be connected every time, everywhere. Every minute they are connected. So you have to have a network and services to meet the expectation of these customers.
Well, we talked about Morocco Telecom because it's been such a major event in the activities of Etisalat Group this year. It's worth stopping at the Moroccan market a little bit and talking a bit more in detail about it. Well, the market is quite a healthy one. It's still growing. Mobile penetration is 133%. And in the old days, we used to say, 100% is saturation. Now the saturation point is gone. We don't have saturation points anymore with machine to machine and so many other things coming to the mobile industry. So the market is growing. Morocco Telecom is the dominant player with a large market share, more than 40%, 41% market share. And the customer base of Morocco Telecom has increased significantly over the last several months. Now, there's been some changes also to the way you account for mobile prepaid cards in Morocco that has readjusted also the customer base and revenues at some point in time this year. And that happened in April. Do you see this as a positive change or a negative change?
If you look at Morocco Telecom, and if you look at specifically Morocco, their operation in the 4 African countries have been doing very well. Growth of average 10%, which is excellent. In Morocco, the last 6 quarters, which is, let's say, from Q2 2014 and the previous six quarters, Morocco Telecom was declining in revenue. Although the market was growing in subscriber, but Morocco Telecom in Morocco was declining. And it was an alarming sign for us during the negotiation before the acquisition. But we saw the potential in the market as well as the potential in the company. Q3, after we took over the company, is the first quarter where they have shown a positive trend. So 7 quarters of continuous negative trend. In Q3 2014, the first quarter where there is a positive trend.
Well, it seems that postpaid is doing well in the Moroccan market, picking up on the high end of the value, and the mobile market ARPU has been growing because of that. It seems that there was a bit of a challenge between the 9 months cumulative ARPU in 2013 compared to the same 9-month period in 2014. The ARPU of Morocco Telecom has actually dropped, contrary to the market growth. Is that a temporary adjustment, or is it something that Etisalat Group is going to be addressing to sustain the growth of Morocco Telecom? Because remember we talked about the concern here that you're buying into a company that's generating net income, and by default, major net income generation means potentially lower, top line growth. So how do you manage these two in a balance?
And in the first half of this year, there was very aggressive price competition between the 3 operators in Morocco. There has been more sense in the market in Q3, and if you look at Q3, Morocco Telecom share in the market has stabilized, so it's not dropping. Even the ARPU is stabilizing. We expect Q4 to continue the same trend, so we are not very much concerned because we see the trend is converting from a negative trend to a positive trend. In addition to that, 4G is coming into Morocco in 2015, and that will provide a huge opportunity for all the operators because data is very much under-penetrated in Morocco, and they have huge potential for mobile data growth in Morocco.
Excellent. Well, speaking of mobile data, and you had touched upon this point earlier, the industry is no longer defined in terms of infrastructure, ARPU, and voice and internet services. It's going way beyond that. We have the layers of infrastructure, we have the layer of IP services, voice over IP, managed services, messaging, big data, data centers, etc. The content layer, video, audio, advertising, health, lifestyle, sports, education, etc. Devices, of course, who doesn't look at devices on a daily basis today as a part of their life, from handsets to tablets to watches to glasses, home gateways, home automation mixed with communications, TV itself becoming a different tool altogether in the home. And finally, the platforms, the search, the payment, the cloud, the commerce platforms. All of these are layers we all have to handle on a daily basis. And the players have increased exponentially as the space has increased. You've got the telcos on one hand, the OTT players, the digitizing industries, healthcare, hospitals now want to play in telecoms and internet. Media is in this space as well, banks, etc. And the technology companies, Microsoft, Oracle, so on. All of these people are scrambling for the same space. And yet it seems, and it is in this chart, we've actually highlighted in dark the areas of focus of each industry or sector, and in light the lower level of focus. And you can see telcos are still focusing on infrastructure. Most of our discussion today was actually about 5G, high-speed LTE, consolidating passive infrastructure and sharing it, and deploying fiber, increasing capacity, etc. And we see slightly lower focus on the IP service layer. We're dabbling into it. There are digitization or digital business units being created in telecom operations around the world. We're getting there. Yet there is somewhat and somehow a high level of hesitance in, one, investing in small companies that do not generate major revenues compared to the other revenues that come from the infrastructure business. Two, the eroding margins and revenues in the other parts of the value chain, the further up you go, because there's a lot of free models. Yet we're seeing OTT players coming from that part of the value chain, as we see here, dark, 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 on 3 layers of the value chain, and moving towards the infrastructure, ultimately reaching a point where they could potentially play in our backyard or the telecoms operator's backyard. Similar for technology companies and digitizing companies, depending on their capacity. Now, with this big picture, you mentioned the digital business. Will Etisalat have the same audacity and courage to go after both on the investment as well as the integration of digital industry specifics, the same way it went after the expansion in infrastructure, both geographically and scope-wise and depth-wise on capacity?
Wow.
It's a big question.
It's a big question. I think I don't think any company has figured out what is the right answer for this. But let me try to explain what is our position on this. To start with, digital is touching not only telecom space, it is touching all industries. And we believe that digital, who is going to be the winner in the digital space in any industry, is going to be the winner in business in the future. Take example, today, I mean, there is a big debate about Uber and what Uber has done. I mean, it's a value destruction from one side, but it's a value creation on the other side. This is going to happen in every industry. This is only a small example, and it's going to happen. Does it mean we don't have to go to digital space? No, everybody has to go there. And the people who does it ahead will have first time to market advantage.
Are mobile operators or telecom operators in general equipped to operate in such a dynamic space where companies actually fail? You know, could you address your board by saying, look, we're going to invest in this tiny operation that doesn't make any money, and we're going to put like 10, 15, 20 million dollars in it? Will you actually get the time to debate this and say, you know, yes, let's lose some money on this, no problem. We don't look at it as an investment opportunity as a standalone basis. Do we see this happening? Are we going to get at some point in time to that level where shareholders are not looking at digital investments as kind of profit, net income, or value-added investments on their own, in their own right, but rather to the entire picture?
I was coming to that.
Yeah.
If you look at the telecom landscape compared to the other industries you have explained, telecom operators are the only operators who come under regulations. In each country you operate, there is strict regulation. The others are not regulated at all. So you have mainly disadvantage, but also advantage in certain area because you have some kind of protection. We are very good to build network infrastructure. I mean, this is our bread and butter. So we should do this more effectively, efficiently, and provide better quality of experience to the customer. This is our bread and butter. Going up in the value chain, I think telecom operators should have a role. The question is what role and how. This is the two challenges. We know some global operator like Telefonica. They have tried it with Telefonica Digital for a few years. Then they had to restructure. They had to, they thought this is the best way. It did not work. And at Etisalat, we are doing a couple of initiatives. One is exactly what you said. There's a company called Imina. We are a founding shareholder in that company. And this company is investing in small startups in the region, in the Arab region. This is their focus. As you said, after a few years, there maybe one of them will be a big WhatsApp or something like, or it will be just an investment. We have learned certain initiatives and certain capability out of it. Mobilely, in Saudi Arabia, on the same thing, they have similar arrangement. They have allocated a budget to invest in small startups and to incubate people in Saudi Arabia. All of these things is exactly what you said, Ghassan. We have to play a role. It is not our DNA. You need to do it in a different way. Those guys are different. Their look and feel is different than our look and feel. Third, we created digital service unit in Etisalat Group. It is working at the group level. Its main focus is really to see how best for Etisalat to play in that space. Sometimes through partnership with OTT players, partnership with technology companies, or is it partnership with local players? In some places, we are developing our own small platforms and trying to apply it across the footprint. So many things we are doing in that space, but we don't think that the telecom operators have the DNA to go today and invest in the IP platform layer. Many people have tried, all of them have failed. It's the playing field today is not really level.
So you see basically scale?
Scale is one, but
capacity
also
and
scale,
technology.
capacity, technology, but also something like net neutrality has to make the playing field level for all operators. Today, this year, it is estimated that mobile operator will invest $220 billion in capex. $220 billion. Okay. Who is using these pipes? Mainly it's the OTT. Now we know there is a debate between the OTT and the mobile operators. I think this debate needs to be taken to the next level. What is the right partnership model? What is the best business model? What is the win-win proposition for the market? If we don't have this debate, we will still continue in our value destruction model rather than a collaborative value addition model. And this is, I think, what we have to think. We need to be bringing a different mindset into the game rather than the old mindset where we really go after each other. No, I think there is a huge opportunity for us. If telecom and mobile operator really collaborate with internet companies and media companies, there will be a win-win-win proposition for everybody from financial point of view, as well as a better customer experience. This is which I think there's a huge opportunity, but we need to bring most of the mindset together to see what is the best model.
So on this collaborative note, Ahmed Julfar, CEO of Etisalat Group, I'd like to thank you very much and thank the organizers for the opportunity of having me here next to you, having this wonderful industry and Etisalat-based conversation, and all my best wishes for continued success. Thank you very much.
Thank you, Ghassan, and thank you.